Welcome to StockMarketFunding.com. It's a Friday morning. We had a bogus unemployment report. Here's the Dow. I want to show everyone first on the monthly chart, as when I called for a market reversal, bear market reversal, it's the following month, which is this month. That's the first month of the reversal. But just like we teach people is that it's got to be confirmed on the second month. And part of that confirmation is that half of January monthly bar will be resistance. And it will stay and be confirmed as a bear market reversal as long as resistance remains half of that bar. And it's a monthly reversal that is quite different since the 2009 bear market low. That's the top. We only had, during that whole short cover rally in 09, because that's what it was, as they covered the shorts off the bottom from the 08 bear market, people ran in, they got exuberant, we got up to the high, but here's the change, is that look at the size of the distribution bar. First time. Over here, it was just a narrow range one. They came in at the bottom. There was no reversal back then, and that was back in January or June of 09. But now, what we are seeing is that we're seeing a monthly reversal. And markets don't go straight down, but the Dow is broke below the key 10,000 level. And basically, from the swing high of 10,723 down to today's swing low, below the 10,000 mark, is that we will be looking throughout the month of February to confirm it, locked, sealed, and barreled, is that we would never, ever close back above this trend line. If we were to close back above it, that's half of the monthly SMF Pro Trader bar. And I will show an example here as soon as I can get my application to work. My trend tool is that we would have to close above it. And that's going to be the confirming part. And I'm going to blow just this part of it up here. So, everything, okay, so here's the big down move in January. Half of that monthly bar is resistance. This bear market reversal will not change its directional trend until you close above half of that down move. As long as we stay below half of this monthly reversal bar, and that stays resistance, and more importantly, if I draw another trend line, you'll see that the body, the right body and the left body, if we remain below that low of the monthly low, like that right there, and we don't close even above this, then that means that that's part of the confirmation. Now, this monthly chart for February is not final until February's over, which would put us into March for the monthly confirmation. However, by employing our skills, we can go over to the weekly chart. That's the monthly. I'm sorry, I'll bring up your weekly chart here. And you can see here that I'll put this here in the video, is that 4 weeks there equals one monthly bar, because it takes 4 of these. Now, the same principle stands. However, what I will warn the world about, and it's on you, if you're holding an IRA or a 401k and you're invested in the market and you're writing this stuff down, my suggestion to you today, we broke the key psychological level of 10,000. This red line is called a 20-week moving average. And that blue line is rolling over. That means that when the blue line here, the 10-week was rising, we had a really good uptrend. But now it's changing. It's rolling over. And that is the directional reversal, bear market reversal. What will have to happen in order for us to even ever think about it getting back to a bull trend is that half of that weekly bar, I would have to close above 10,400 on the Dow. I would have to close above here. I would have to consolidate. I would have to get back above that 10-week moving average that's descending in price. That means that any up move is very weak and should be sold short because that's descending. It's not ascending like here. When it pulled back a couple of weeks, see the blue line going up? That's the relevancy of momentum, and you buy the bounces. Well, the thing about it is, it's in a bear market reversal until we close back above half of that big weekly distribution bar that happened on 117. And that the buying has to be as equal as the selling. You can't have 1/3 of the buying to the upside volume. You've got to get some equal weighted buy volume as to the down volume. The up volume has got to have a scenario there. And it's a thing that we teach you very intrinsically about. So if you want to learn more about it, the Dow broke key 10,000. We're back above the level. It's a Friday. It's a very light volume tape. Very light volume. What will happen with institutional money managers and mutual funds is they're going to say, well, we've had this much correction. Now I want to buy. And we'll get pockets of buying. But remember, not everyone is convinced. And basically, when we undercut, the Dow has not been below 10,000 for quite a long time. Back over here in this short frame, here's the last time that we were there, right here. That was back on 11/1. We got below the 10,000 mark. We got back above it. And now we're testing it. But the up move is going to be weak. So that remains that if you're holding equities and you're holding stuff in your 401k or your IRAs or whatever, and you do get a up move in the market, take the opportunity to sell into that. Because if you don't sell into it, you're going to regret it. Call us today at www.stockmarketfunding.com at 702-685-0772. And just remember, come and get educated. We're here to help you. We got many programs. We've got the 52-week Pro Trading School. We've got 30 other kinds of programs you can get on. Portfolio risk management is one of the keys to these markets. Understanding where you should be in these markets and how you should be looking at these markets.